looks like there's quite a lot of stuff UK specific this morning, Joe.
Big feature on macro was the collapse of the oil price yesterday, one of the steepest ever one-day falls. So I think it was prompted by higher than expected inventory data, but it just shows how fragile and false that market actually is. We're back into the mid-80s, so short-term panic over. Same sort of news, I think, on interest rate fears. They faded slightly. Most markets were better overnight, but small. I think all eyes now remain on the US jobs data tomorrow. We've got the non-farm payrolls, and we're firmly into the territory of bad news is good news and vice versa. So we're looking for the Fed to have created lots of unemployed people in the recent past for us to get excited about lower interest rates again, I'm afraid, is the honest truth. Yeah, quite a lot of stuff out in the UK. There's a story circulating in the press last overnight about Metro Bank requiring further capital. They need to raise a further £600 million of capital to satisfy their regulator of their financial position. Shares have been weak and they're off sharply again today. And I mean, in short, investors currently, as we know, are puking at the sight of bonds, leverage and banks, and Metro has exposure to all these things. And it's really been caught in the crossfire. Operationally, as a business, it's actually been doing quite well. But we've sort of yet to hear from the Metro management on this front. But to my mind, it just highlights the problems of investing in banks, which are inherently unstable and only ultimately exist at the discretion of their regulator. So who would want to be a bank? I'm sure Metro will survive this and pull through, but where it takes the share price, who knows? It's impossible to know. By contrast, we had an update today from one of the UK's two listed pawnbroking businesses, Ramsden, which as an industry, not a bank, but they lend money to people in a very traditional way. But that end of the market, with the regulatory crackdowns we've had on subprime lending, such as payday loans and doorstep lending in the recent past, pawnbroking is about the last remaining place certain poorer members of society can actually obtain credit these days. So Ramsdens are actually doing very well. Like Metro, they're growing their business, they're growing their footprint. And also like Metro, like all other smaller listed financials, they've been very weak in recent weeks.
It's an interesting space, actually. And I've always been surprised when I've looked at Ramsdens, and H&T is the other one.
Yeah.
They have a very high level of recurring customer. They have people who put items in and then come and buy them back a small number of months later, and then they do the same again a year or two later when they've got another need for credit. So it's quite a recurring model for people who are in that situation and need to do it, and they build up actually very strong customer loyalty with those people. So I think it's a much higher quality market than a lot of investors give it credit for. I'm not surprised that Ramsden's doing well.
Yeah, no, it becomes, I think it's just part of the way households manage their cash flows, and it becomes a regular feature, and these businesses are embedded in their community, and they have, as you say, they have regular customers. And although they're not always the same people, it's a category of society that unfortunately lives in a permanent recessionary environment. So they tend not to see the ups and downs of maybe the customers of Metro Bank or other more established lenders.
Yeah, no, interesting space.